September ended a 5-month winning streak for the S&P 500, and October started with an ironic twist. Will we see a Black Monday next week? In this S&P 500 analysis, we will analyze the S&P 500 price action, the market sentiments, and its internals to see where the S&P 500 might be headed and what key price level to pay attention to in the coming week. Looking at this S&P 500 monthly chart, in the month of September, the S&P 500 printed a bearish engulfing candle after having pierced through the top of this megaphone channel. For the month, it lost 3.92%, or approximately 137 points. It is still hovering near the top of this channel. So far, the October price action continued where it left off from September in a slight bearish direction. Zooming in on the S&P 500 weekly chart, the range for the week was a little bit under 74 points. It gained almost 50 points, or 1.52% for the week. For the year, it is still up approximately 3.51%, or slightly less than 114 points. The 10-week moving average is up, and the 40-week moving average is kind of flat. Another week closed below the 10-week moving average, and it printed at an inverted hammer type of a candle. So the good thing this week is the price action broke this one-time framing up. It broke this one-time framing down and started a one-time framing up. Now let's go take a look at the sentiment and the internals before we analyze the S&P 500 price action in more details. Looking at the VIX continued to be inside of this 20-30 zone here. And it's basically been hovering near the 30 area. And also the put-call ratio is still under the 0.75. And unlike last week, it did not move above the 0.75. So right now for this week, it closed at 0.69. And the New York up-down volume ratio, the New York Stock Exchange up-down volume ratio did not show strong buying on days where the S&P 500 was up. One thing that stands out is the up-down volume ratio on Friday was positive 2.14, where the S&P 500 lost almost 1%, or 32 points. This indicates the index was down due to some heavily weighted stock, such as the FANG stocks, and not a broad-based market decline. Also, we see that from the daily advance decline on Friday, the advancers were leading the decliner by 787 issues. For a day where the S&P 500 dropped 1%, one would expect 1,800 to 2,000 more decliner than advancer, not the other way around, to have a positive 787. So this clearly showed the decline was concentrated and not broad-based. The New York Stock Exchange new high, new low is not much change there. It remains positive and under 100. On Friday, the New York Stock Exchange cumulative AD line is in a positive divergence with the S&P 500. Last time when it was in this state, the market decided to resolve the positive divergence by taking the index and the AD line to a lower low. And it could do the same thing this time, or it could rally the S&P 500 back to a higher high. We just have to wait and see what the market will do. Now let's move on to the Nasdaq market. Strangely enough, the Nasdaq up-down volume held up pretty good, especially on Friday, where the Nasdaq 100 lost over 300 points, or 2.83%, and the up-down volume ratio was only a modest minus 1.23. The daily advance decline is a bit sporadic. On Wednesday, when the Nasdaq 100 gained almost 1%, or 112 points, there were only 70 more advancer than decliner. Then on Friday, where the Nasdaq 100 lost 327 points, or 2.83%, there were only 210 more decliner than advancer. Definitely not a broad-based advance on Wednesday and not a broad-based decline on Friday. And the Nasdaq new high, new low also remained on a positive throughout the week, and under 50 more new high than new low level. Even the big sell-off on Friday, it has 17 more new high than new low. The Nasdaq cumulative AD line did not show any divergence. From the sentiment and the market internals, market participants are not in a fearful state, nor are they in a greedy state. I would put it like a jittery state, getting ready to run out as soon as it appears the punch bowl is being taken away from them, or someone whispering something negative. Now, let's analyze the S&P 500 price action and see what we could expect for the coming week. Now, looking at this S&P 500 daily chart, we see that the price was on its way back up toward the 3428.92 before it got interrupted on Friday by the news that the President of the United States have tested positive for COVID-19. Then it kind of pulled back and printed a indecisive type of candle, a spinning top on Friday. So right now, the support level that we be keeping an eye on for next week will be this gap fill here down at 3306.88, and then the 3200. If it doesn't find any support here at the 3306, then if it dropped below the 3200, then the wildcard number will be this 38.2 Fibonacci retracement near the 3054.74. Then on the upside, the resistance will continue to monitor the 3428.92, and if we get above that, then essentially we'll be looking at the all-time high near the 3588.11. So looking for the possible downside scenario, it would be coming down here to fill this gap and maybe come back and back test it and fail, then come down and try to find some support at the 3200 level. And if that failed, then we'd be looking forward to try to work its way down to this 3054.74. And on the upside scenario, one possibility is to come down, fill this gap, and then we get a bounce back up and work itself way above the 3428.92, and then we'd be watching 3588, the all-time high, to be back in play. Then the other upside scenario would be just come up to the 3428, back test, and then push through. Okay, so those are the scenario, upside and downside for the S&P 500 for next week. Now let's take a look at the other market indexes. For the Nasdaq, we see that the Nasdaq broke above the 11,495 level. Then on Friday with the news, it got pushed back and closed near the low of the day. So next week, the downside scenario would be looking for this thing to come down and fill this gap, and unable to get back above the 11,177, and we'll see the possibility of it work itself way down to the 10,313.94 area. Now, the upside scenario would be that it will come down, fill this gap, and get a nice bounce, and push us through the 11,495, and then work its way back up to the 12,000 level. And for the Dow Jones Industrial, it moved back above this 27,433.50, and it is holding above that. So right now for next week, if on the downside, we'll be looking at this gap to see come down, fill this gap. Would it be able to get back above the 27,239? If it is unable to do that, then we'll be looking forward to work itself down to this 26,525 level. Then on the upside, come down, fill the gap, get a nice bounce, and push us back to take out the pivot high. Then we'll be essentially watching the all-time high to be back in play at 29,199.35. For the Dow Jones Transportation, we see that it is holding above the trend line and also above this support level at 10,960. So on the upside, we'll continue to monitor to see would it be able to get up to the 11,623.60 and close with a new all-time high. On the downside, we're essentially looking for it to come down to this 10,960 and see would it be able to hold support. If it doesn't, then we'll be looking for it to come down and fill this gap here near the 10,640, this gap. For the Russell 2000, we continue to watch the Russell 2000 making its way back up toward the 1610, this pivot high near up here, and also this pivot low. And for the downside, if it pulls back, then we basically are looking for the 1,432.5 for potential support. Let me give you my update for my scenario on gold. You can see that gold booked down from this 1923.70 price zone here, and now it's coming back to back test this zone. So if it is unable to get back above this 1923.70, then I'd be looking for it to continue to work its way down to this target area of 1804.40. And if it is able to get above this 1923.70, then watch for the 1950 for potential resistance. Essentially, this trend line here, if it is unable to get above this trend line, then I'd be looking for this thing to come back down and retest this 1923.70. Because if you look at gold as a safe haven trade thesis, it is just not there, right? Because on Friday, with the news from the White House that the President of the United States is contracted with the COVID-19, the gold actually closed down. It did not spike up, right? So there is no safe haven trade for gold right now, and that is not bullish. So it's kind of bearish right now for gold in that standpoint. So I'd be watching this zone here very carefully to see how the price action behave. If it's unable to get through there, then I'd be looking for gold to sell off and get down to the 1804.40. In summary, although the week was full of twists and turns like the chaotic presidential debate, the on-again, off-again negotiation on the stimulus package, and the news of the U.S. president contracted COVID-19, the market sentiment did not turn fearful or mass buying of protection for the downside. Instead, we saw steady market internals, concentrated selling from the tech stock, and gold had hardly moved. We saw a lack of broad-based selling from the advanced decline, then the lack of panic selling from the up-down volume ratio. A lot of people are talking about the uncertainty due to the COVID-19 news from the White House, but looking at the market, it appears it is pricing in for a change of the guard in November, unless some major black swan event occurred that will alter that mindset of the market regarding to the outcome of the election. I will continue to monitor for potential upside opportunity in stocks that are less oriented towards tech. So as far as Black Monday or October massacre concerned, right now the market sentiment and the internal do not support that thesis. But that doesn't mean it can't change. One key thing to watch for the possibility of a major sell-off is a divergent all-time high from the Dow Jones Industrial. Yes, the Dow Jones Industrial. And by the way, this year's October 19th falls on a Monday. Don't forget to click the thumbs up to help me share and promote this video on YouTube. If you have any question, comment, please share them in the comment section below. Thank you for watching and stay safe.